Good afternoon, retail traders. I want to show you a couple chart patterns that I'm kind of liking right here, and it's on Apple. And these are recognizable patterns that could tell you a possible reversal or a possible downtrend. So let's get right to it, and we're going to talk about Apple. My name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. And we're going to talk about chart patterns, moving averages, and being in the now. So this is the daily time frame on Apple, and I'm going to show you a couple. Right now, being in the now, you want to know that first before you take any kind of trade. So the fat cats have been calling a bubble. I think they're just calling a small correction to jump into the trade. Nothing's gone real bearish. All the fact that they call an all-time high on the tech sector, which is an AI bubble, is what they say. Now they're going to get back in these stocks, I guarantee it. They're trying to transfer their wealth into the other sectors, so this is like a sector pullback, just in tech. Those are the stocks that are getting hit the most. Well, they've had a heck of a run for one, from Apple alone, from 169 to already 288 in a year. That's a pretty good little gain, wouldn't you think? I think it's a pretty good gain. About $120 in a year's time frame, and we had the big pullback there. You see the pullback with the tweezer bottom right there, and then we finally broke out and had the big run, so we needed a pullback. So the fat cats are sector rotating, which I think they will get back into the tech sector soon, because we're starting to hit a solid support on a lot of these tech stocks. And I called the reversal a couple weeks ago, and we broke out that next day on Thursday, not last week, but the week before that, and we had that 12-point run. Well, what we did is a lot of stocks we bounced off the 200 SMA or EMA on the weekly or daily time frame. So I always use this as a pivot point in reference to a time frame, and it doesn't matter what time frame I'm in. Actually, here we've got a pivot point, and I'm going to show you what I mean by pivot point off the 200 EMA. So we pulled back, we bounced up, and we hit that 200 EMA. Then we had the big sell-off back in March, and then run up and hit the 63 and the 50. Dipped again, 50 SMA and the 63 EMA. And then we finally broke it, finding some resistance. Well, here's that 200 EMA right here, and then we tried to break it here. We tried to break it here, and then we finally broke it on a triple top off the gap. And then she came back and retested that 200 a couple times and ran up. Well, this is what's important to watch. So we had a yearly high at 288.62, and it formed what you call head and shoulders on the way back, and then it went ahead and pulled back and hit that 200. So there's that 200 EMA again. And we broke out, and we had us a little head and shoulders. Little head and shoulders. We got the left shoulder, right shoulder, and this one didn't quite get up there yet, so we're just going to do it as a double top after the all-time high. They're right there at 288.62, or at least at that high. So as we start to pull back, we have the 9 crossing over the 21, which is a bearish signal. And then it comes and bounces off the 200 EMA again, which is we've considered to be a pivot point in this time frame. And we bounced up, created a little head and shoulders right here. So I'm going to draw in the head and shoulders line. On the pullback, we had 3 black crows. So I'm going to magnify this up a little bit. And there's our 3 black crows. And then we had the reversal to the 9 EMA, and then she had another 3 black crows and bounced off 4-day period off the 200 EMA. So I'm going to draw in these black crows. We had spin on top. Right there. Then plus we got the 200 EMA right here. So we got 3 black crows. Now I'm going to go through what 3 black crows is. I look at it a little bit different than the fat cats do. So let's get that straight. Three black crows. That's 3 consecutive red candles on a downtrend. Now, if you look at the definition of it, and I've got all kinds of, I've traded this stock, I trade this pattern over and over and over. So 3 black crows compared to the fat cats, 3 black crows is a bearish candle. Trend reversal candlestick pattern in a financial technical analysis, signaling a potential shift from an uptrend to a downtrend. It consists of 3 consecutive long body red or black candles that open within the previous day body. They have to close below each body of the thing and close progressively lower. It represents a strong, sustained shift towards selling pressure. So we've had selling pressure for 3 straight days. Appearance occurs in an uptrend, and it can occur in a downtrend. You could have 3 or 4 different sets of 3 black crows. Structures, because we've already talked about that, closing price, opening price of the candle. How to use the pattern. This suggests a highly profitable reversal, indicating that the bears have gained control. Well, that's not always the case. Now, I find it not to be the case most of the time. I find it to be a place of consolidation and maybe a run back up to that first crow that we saw. And I've got diagrams to prove that. Let me see here. I don't want that. Let me get right to it here. So we have 3 black crows, and a lot of times it'll come with a spinning top and have 3 white soldiers right after it and run back to the top of that candle. Same as when you have 3 white soldiers and you have a spinning top, you could have a pullback because that's an aggressive uptrend. This is aggressive downtrend, and that's your crows and then your soldiers. So it is a possible reversal, and I've seen it over and over and called these trades out 49 out of 50, maybe even more than that, they reverse. And it doesn't really, but when you're on a weekly and a daily time frame, I think that's the end of the bear run, and you start to turn bullish and consolidate on that third crow. So down here at the bottom, we also hit the 200 EMA. Then you got the 200 SMA right here. So as we hit that 200 on this third crow, we started consolidating with the body inside of that third crow. Then she's retested the 200 twice. Then we had the breakout to the top crow, and you're out of the trade with a scalp. Just like that. Consolidation, we have the 3 black crows consolidated off the 200 EMA, which tells me that we're getting pretty bullish. And then when you had this hammer come out, I was ready to take the trade, if not sooner, and scalp it. And then we run back up here to this here double top. Actually, probably a triple top if you count the wick. So I'm using the body of the candle. It's a double top. And that's an exit idea. A double top is always an exit idea because you will have a small pullback or a bigger pullback. It's a bearish flag. So we've got all kinds of patterns here. Let me move this here crow. We'll just move it over here to the side because there's another pattern on here I want to show you. On the daily, you've got what you call head and shoulders. Inverse head and shoulders. There's your left shoulder, then your right shoulder. And then we came back and hit that right shoulder. So that's called an inverse head and shoulders. That's a possible reversal off them two crows right there. Two big sell-off. Or we could be looking at one more crow and touch the 200 EMA and take it for a double bottom off that 200 EMA. So we've got a reversal pattern, and I tell everybody when you're trading the inverse head and shoulders, on the second pullback, which is this right here, you usually get your bounce to the upside. And the upside resistance would be what we hit here with these wicks, and that's called the 63 EMA. So we've got the 63 EMA right here. In red on the daily, and we've got the inverse head and shoulders right here. So I type in inverse head and shoulders. Now, there's only one pattern in here that's bearish. Can you tell me what it is? I haven't typed it in yet, but I mentioned it. It's the double top. Whoop. It's called getting ahead of myself. So we got a double top right here. That's your bearish flag for the reversal to the downside. And like I said before, these three black crows usually reverse to the upside. On most cases, three black crows are reversal. Three black crows consolidated, and then we had a head and shoulders right here. So that's a bearish flag. That means you could pull back. You have a head and shoulders, so we had inverse head and shoulders, which is the opposite of a head and shoulders. We're going to put this one in here. And that caused that reversal to the downside. Then we created the inverse head and shoulders. So you got the head and shoulders. Then you got the inverse head and shoulders. It just works the opposite of a head and shoulders. And it breaks out, pulls back. And then we come back again and hit it right here for a reversal to the upside. Unless we get one more candle. And then that'll be the buy signal. Either off the 200 EMA, if we get real bad news and the market's trending bearish, we could hit 240 for the final support level at the 200 SMA. So this is bullish, this is bullish, this is bullish, this is a resistance to maybe get out of the trade, the 63 EMA. Head and shoulders is bullish, and a double top is bearish. So I got more bullish indicators than I have bearish indicators. So the only thing that's holding this stock for a real good run is some kind of news to come out. The unemployment number's been good. The CPI number was good. Something else was good. We're going to give the market might not like a new Fed chair. That could be a bad thing. So the pow was more or less for the fat cats. We need a Fed chair that's more for the small people. So we have a possible reversal on the head and shoulders. We have a possible reversal on the 200 EMA. And we have a possible reversal on the 200 SMA. So I'm going to be watching this real close this coming week because we had these two engulfing candles that let out with an inverted hammer. And we definitely had that double top, triple top counting that wick. So we did have a triple top there. And then that caused the hard reversal. So that's just an indicator of a bear flag on the head and shoulders or on the triple top, which is bearish. I tell everybody, get out. Don't listen to a pump when we hit a triple top on an all-time high. You take your profit, you wait for the pullback, and then you jump in. If it's been upgraded, 99 out of 100 times, a triple top will pull back at an all-time high. Then you have your chance to take it. So as we go through the motions here, the 200 EMA is a moving average EMA that is premier long-term technical indicator, plotting an average price over 200 periods, while weighing recent data more heavily in faster trend responsiveness. That's faster trend would be an EMA during price period. It acts as a key trend filter, price above bullish, below bearish. So if it's below the 200 EMA, it's bearish. And if it's above it, it turns bullish. And you could bounce off the 200 as it comes back and bounce up off of it. Or if you're below the 200 and you bounce up, you could sell it right there and you still be bearish. And if it starts to break that 200, you have a lot more upside to go. Pausing, maybe you think you might have a little pullback to retouch that 200 and then have the big breakout after that. And we have the inverse head and shoulders. Inverse head and shoulders is a reliable bullish reversal chart pattern occurring at the end of a downtrend, signaling a shift from the selling to buying pressure. And that's called an inverse head and shoulders. And they're in all kinds of directions. You can go sideways with them, straight across, sideways, straight across. You got your head, your shoulders, and your neckline. And then we had the three black crows and then the double top, which is a bearish indicator. But we now realized that it was a triple top. And we've pulled back to that shoulder line on this head and shoulders. This looks real good for a possible slow little bounce tomorrow. But if it starts to go below that trend line, and I'm going to be pretty precise about this number, come Tuesday, I might have said Monday, and that's going to be right around 254.20, 254.19 to the penny to hold that stock up. If it doesn't hold that to the penny, give or take one or two, we could see the 200 EMA for a double bottom off the 200 EMA, which is a bullish flag, or we could see it hit the 200 SMA on the daily. So that's it. I just wanted to show you. I know it might have been a little confusing because I kept going back and forth, but almost all these patterns that I pointed out and the moving averages are telling me that we're still bullish because we're above the 200 EMA. As long as we stay above it, we're still bullish. We come back and hit it and get this third candle and have another crow, which would give us three black crows, and we'd have a good reversal to the upside. A more stronger. This is good. This is a good support. It sure is. And this is just as good or even better because you have the possible bounce off the 200 and the third crow, and you make more money. So we'll see how it goes Tuesday. I'll be watching Apple right out of the gate and see what happens. I wish everybody a happy day. This is the Sneaky Snake trading strategy where I talk about chart patterns, moving averages, and being in the now. Have a great day. See you Tuesday.